Hello, and welcome to today's market update brought to you by CBN Financial. I'm your host, and here's what investors need to know as of October 14, 2025. Let's dive in. U.S. equity markets closed with a mixed tone today as trade tensions and macro risks tugged at investor sentiment. The S&P 500 fell about 0.2%, while the Dow Jones managed a gain of roughly 0.4%. The Nasdaq Composite was the weakest link, slipping nearly 0.8%, dragged lower by sizable losses in mega-cap technology names like NVIDIA and Broadcom. At the heart of the volatility, renewed U.S.-China friction. China imposed restrictions on dealings with certain subsidiaries of South Korea's Hanwha Ocean, and both sides introduced new port fees tied to shipments, moves that signal escalation in their standoff. These actions added fresh uncertainty just as broader optimism had been building over a possible easing of tensions. Overlaying that is a stark warning from the International Monetary Fund (IMF). Asset valuations are stretched, and markets may be vulnerable to disorderly correction, especially with systemic exposures between banks and non-bank financial entities. Meanwhile, the rush of Q3 earnings is underway, and key results are influencing market direction. Goldman Sachs posted revenue beat but lost ground on cautious commentary. JPMorgan reported solid profits but flagged higher than expected credit provisions. Johnson & Johnson beat estimates but surprised with plans to spin off its orthopedics business. On the positive side, Walmart surged as investors shared its new partnership with OpenAI, allowing purchases directly via ChatGPT, an important signal of merging AI and retail. In sector news, chip makers led the charge after a high-profile OpenAI Broadcom partnership announcement. Shares of Broadcom jumped nearly 10%, reflecting investor appetite for firms tied to AI infrastructure expansion. That said, sectors heavily reliant on global trade, like semiconductors, remain at risk from supply chain disruptions or retaliatory actions. On fixed income and commodities, 10-year U.S. Treasury yields hovered around 4.0%, while WTI crude oil declined toward $58.60 per barrel. Gold continues to attract safe haven flows amid uncertainty. What this means for investors: the market is showing fragile complacency. Valuations remain high, and geopolitical or policy shocks could trigger outsized moves. The IMF warning should be taken seriously as a backdrop, with trade risk back in focus. Companies with less international exposure or strong domestic moats may hold up better. Earnings-driven trades make sense in this environment, especially in sectors tied to AI, semiconductors, or enterprise tech, though such names are also vulnerable to sentiment shifts. Hedging or partial downside protection, e.g., selective puts, collar strategies, may be warranted if volatility spikes. Watching central bank signals and any shifts in rhetoric will be critical. Monetary policy remains a wild card. Hello,